Major mutual insurance company says thanks, but no thanks to infinite banking.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And today, man, this is something that is brand new. We have had a major mutual insurance company kind of come out and put a stake in the sand and say, hey, we are taking a position on infinite banking. And this position was a surprise to me. What about you, Anthony?
Yeah, I'm not surprised that they had an issue. I mean, they had some valid concerns, but I think they this was far reaching, that they overreacted. And to have such a memo specifically saying no more infinite banking, that was a huge surprise.
This reminds me.
Uh-oh.
Yeah, this reminds me of when I've got 3 kids. This reminds me of when 2 of them are acting up, and I'm like, "You're all going to timeout. I don't care." And one of them sitting there looking at you like, "What the heck did I do?" And you're like, "You didn't do anything, but I don't care. You're all going to timeout."
Well said.
Exactly, yeah. Right. So that's what I feel like right now. We're in timeout. We didn't do anything wrong, and today we've got a memo. We're going to go through this, and we're going to read kind of this memo that was put out by MassMutual. Not only was it a memo, it was the first memo of the year.
Yeah. I think that says a lot.
Yeah.
The first memo that they're saying is IBC, no thanks.
Yeah, exactly. Anthony, we're going to be sharing our screen today. We're going to be sharing a video, right? And some content with you guys. So if you guys are driving, bear with us. If you guys are watching this and you want to see some of this content, make sure you jump over to YouTube and watch the video along with it. But perfect. Are we sharing?
Yeah.
Awesome. Good. All right, guys. This is the memo that went out as of whatever it was, January 3rd or something. This is from MassMutual, and it went out to all MassMutual kind of brokers and advisors. Yeah, January 3rd, 2023.
Yeah. Yeah, the memo is 2023-001.
Yeah.
First great way to start the year.
Exactly. All right, topic, as you can see there, scroll back up just for me real quick. Topic, personal banking strategies to promote whole life insurance, effective immediately, right? Discard after, never. You're going to hold on to this thing indefinitely. Mm-hmm. For internal use only, not for use with the public. We debated on sharing this, and you know what? We decided to share it. We had some choice words in that conversation for, hey, they don't like us, then that sounds good. But go ahead and scroll down. Here's the breaking news, right? When this thing came out, essentially what they're saying here is MassMutual does not support concepts that promote or position the purchase or sale of whole life insurance as a personal banking or similar concept focused on maximizing policy cash value and immediate and regular access through policy loans. Anthony, how does that sit with you?
It's very difficult. A lot of ways to explain it. I mean, there's some anger. I think they're being a hypocrite.
Mm-hmm.
And just like you said, they're punishing everyone for sins of the few.
Well, let's talk about the sins of the few. Let's kind of maybe open up with that, and let's say, hey, here's what our stance is. Here's been our position really from day one, and maybe we can kind of help you guys navigate, or maybe it's just clearing up our message if there is any sort of confusion. Mm-hmm. Anthony, if you were to maybe draw a line and say, hey, here's good practices, here's bad practices, who do you think they're going after here?
Well, I think they're going after people with bad practices.
Agreed.
Right.
And could you give us an example of that bad practice?
Oh.
I need, right?
Okay.
Yeah.
What makes you think buying liabilities, aka cars, or going on vacations, how can that build you wealth? And there's some people, I mean, they have some cool content, at least produced, and some of it is good, some of it is it lies. And I don't think they're doing it intentionally, to be honest. I think they don't understand. But you can't, just by taking a policy loan and paying it back, that doesn't increase your policy in any way. When we take a policy loan, remember, it's not from your policy, it's from the insurance company. We're just using your policy as collateral. So loaning against it makes zero change in your policy.
Agree 100%. What I think is, I think this was put out because, right, you and I have been doing this for a while.
Yeah.
I've been doing it one day longer than you. And if you look at some of the people that have kind of come along since I started and you followed, is that they are out there and they are promoting this strategy. And I would think that they're pretty new to this idea because of the way that they're presenting it. Again, we watch the videos that these guys put out and it's close, but it's not quite right. And I think a lot of that material is misleading just on the way that they're educating clients and the way that these policies perform, but then additionally on some of the best practices on ways to use it. And I think this memo is really targeting those guys, right?
Yeah.
Awesome. All right, so let's get into this. Let's look at this overview. Overview, it's talking about strategies that position whole life as personal banking or similar concept is inconsistent with MassMutual's policy because these strategies, and here's where they list off maybe 5 bullet points here that we're going to go through, and I'm going to read it and then we'll kind of chime in and kind of give our rebuttals here. But these strategies often are misleading to customers in violation of insurance law and regulations by positioning the policy as a checking, savings, or retirement vehicle and something other than life insurance. There's a lot there.
Yeah. Yeah.
Let's touch on the misleading part, right?
Yeah.
Listen, if you guys have met with us and you guys have any if you guys do not understand in the first 10 minutes, right, the first 5 minutes that we're using insurance as a product and as a foundation for what we're doing, there's something wrong, right? If you're talking to somebody about some sort of strategy and you don't understand that insurance is a foundation, there is something wrong there. So I don't know if I can touch on that outside of what we do, but I would also say if someone's positioning the policy as a checking, savings, or retirement vehicle or something other than life insurance, Anthony, you got any thoughts on that sentence right there, that statement?
Well, what I know that there's people saying that, that money needs to be moving in order to make money. I don't fully get. I mean, just because it moves from one account to another, I don't see where that builds wealth or that really does anything. And I know there's people out there even promoting that using these policies as a checking account. And it's not, and they shouldn't. Well, I know there's people that are running all of their monthly bills, expenses through the policy. That's not what it should be, or what you should be using it for. So I think in that point, as far as a checking account, I believe they're right.
Agreed. I totally agree with their stance in this statement, saying that, hey, if we're positioning this as a checking account, something that you're going to be transacting in and out of a lot, I totally agree with them. We do not recommend that. If there's any ambiguity there, call us. We'll make sure we get you straightened out there. But the other two pieces, the savings and retirement vehicle, what the heck, man? Like, that's what whole life insurance is. Like, that's what it has been for the last 150, 200 years. Right? Would you agree?
Yeah. And we're going to show later, I think, excerpts from MassMutual's website, and it talks about this being a retirement vehicle and a place to save. So this is where it starts pissing me off.
Yeah.
Right. It's one thing if things are being misled, then let's fix that.
Yeah.
Those people that are misleading, let's not give them contracts, but they promote it as a saving, as a retirement vehicle. And
I will argue as long as the day is long. I forget how that saying is, but man, whole life insurance is one of the best savings vehicles that's out there, and using it as a supplemental retirement vehicle only increases. We've got a ton of content on using whole life insurance as a volatility buffer against some sort of investment account in retirement. Awesome vehicle for doing that. So, man, I couldn't disagree more with those second two pieces.
One thing I do want to talk about again is misleading. Checking account. Yeah, I don't think it should be used for daily activities, but I got onto it about people financing the cars. There's those same people are misleading when they're explaining how dividends and the cash value works.
Yeah.
I mean, there's a guy who's got a great following. I know he's on podcasts quite a bit.
Some big ones too.
Yeah. And he's saying that your policy, he's not interpreting the dividend correctly. When he says the dividend 6%, he's adding that to the guarantee 4%. First of all, dude, if these policies were getting 10%, I mean, this would make our life a whole lot easier, right? But that's just not true. They're misleading for twofold. For one, that 4% is a gross rate before they take out expenses of the policy. And also, when that dividend rate includes the guarantee rate, it's not on top of the guarantee rate. So those are the people that needs to be stopped. Maybe not by the insurance company, maybe by the insurance commission, but those guys to me are in violation and need to be stopped. But I'm probably gonna be saying this a lot because I'm getting upset, but it's hindering our business when people are doing bad things wrong. And then it's starting to reflect on us.
I was just going to say today, if there's a theme, it's just finger pointing. There's going to be a lot of finger pointing right out there, right?
Yeah.
It's not us, it's them, right? And right, guys, we're not going to throw any mud at anybody. If you guys have questions and looking for some feedback on who is a good info to follow, reach out to us, right? We'll tell you who to follow. It's called Infinite Wealth, by the way. All right, let's jump down to number 2.
Okay.
Right. This one says we're going to violate life insurance illustration regulations by creating personal financial plans using policy values without providing the supporting basic life insurance illustration with corresponding guaranteed values and required disclosures. Guys, as you are doing your research and you're looking at this, right, one of the things that an agent's going to do is they should be walking you through an illustration. And as you go through that illustration, there's going to be guaranteed numbers and there's going to be non-guaranteed numbers. You need to understand and know the difference and why those are different. And then also that the non-guaranteed numbers can and will change over time. Those are not a static number. So if you guys have any questions on that, reach out to us, right? We're happy to go through and make sure that you understand that throughout our education process. That is one of the things that we do, and we do it very early on in our process, is we'll pull up an illustration and we'll go through kind of the guaranteed and non-guaranteed ledger.
This one to me,
I agree.
This bullet point here to me is BS.
Yeah.
I mean, maybe it's more a technicality. Because they are correct by the insurance department. We are supposed to give not just 2 pages of the illustration. We need to give the entire thing. Mm-hmm. And I would say, to be honest, there's times when I don't spend much. Sometimes I don't talk about the guaranteed side. So, but that's something that we should be doing. But I think what they're doing is they're just finding, hey, technically there's people that are making this violation, so we're just going to do it. But yeah. I guarantee you the IULs, right, that they're sending out is not having all of those disclosures.
Oh, I like it. More finger pointing, right?
Yeah.
These guys are doing worse, right? Yeah. But agreed. But the takeaway here, right, is I would agree with them, right? If you're looking at insurance, you need to understand how these policies work, and you do need to take into consideration basic or the guaranteed ledger along with the non-guaranteed ledger. All right, 3rd point. They promote large deposits and then early or immediate access through policy loans that are typical red flags for money laundering.
What's your take on this one?
That's BS, right? I agree, right, with the fact that, hey, there is an opportunity for money laundering, and I'm sure that happens. Right? I've been doing this longer than you by 1 day.
I don't know how many times you're going to
I don't know either. It just keeps coming.
I think it's
right?
3.
No, it is 3. But I've never come up on an instance when there has been a situation of money laundering. I've never been there and said, "Hey, this sounds kind of fishy," right? Again, like you said before, I think this is one of their bullet points where they just kind of lumped it in together and said, "Hey, if we max fund a policy and we got a bunch of cash in there, there is the potential for this." Okay, I get it, but I call BS on that too.
Yeah, exactly. Here's what I don't understand. If you are concerned about people taking that cash value out in the early years or right away, why would you have a product that's called high early cash value? I mean, the whole point of getting that product is that early cash value so you can use it. You look at the long term of that product, it's, there's, Todd Langford talks about there's no deals in life insurance.
Mm-hmm.
You give something, then something takes away. If they give you that early cash value, they're taking away the long-term growth. So just don't sell a Heck V. If you don't want people taking out policy loans early, then don't sell a product that has cash value early so people can do it.
Yeah. Hypocrites.
Yeah.
Hypocrites, right? Promote large deposits and then early or immediate access. Early and immediate access, that is one of the key benefits of life insurance. If you look, right, we have this highlighted, right? If you look at the website, if you read the contract, right, having access to your cash is one of the things that makes this thing so special. I can't believe that they're talking about it in a bad point of view, right? Promoting large deposits. Hey, if you got a bunch of cash, there's no better place to put it. So I'm not a fan, right? I disagree on this one.
Yeah. This one is just technicality.
What I would say. All right. Jumping down here to number 4. All right. They don't like these strategies because these strategies are often used with younger customers who have less disposable income or investment sophistication. They talking about you?
Dang. You're on fire today.
And often have no dependents and hence no insurance need. The heck, man.
You know what? I think this is a good time for a video. Okay. So if you're not on YouTube, not watching on YouTube, maybe you can if you want to see it, but we're going to be able to play it so you can hear it.
Sorry, do you need to share a different screen or will it work?
No, it'll work.
Okay.
So this is MassMutual's website, and this is on their page for whole life insurance. They have a video on here, and we're going to play this. And so we're at 14 seconds into the video. Let's see what it has to say.
Insurance, but maybe you should. Whole life insurance from MassMutual can give your children or grandchildren a financial head start by providing a guaranteed amount of life insurance to help them protect their future. In addition, it builds cash value over time. When they're older, your children could use the cash value in their policies to help fund important milestones such as college, a wedding, their first home, or preparing for a baby.
Wait a minute. I don't think I heard that last part.
Use the cash value in their policies to help fund important milestones.
So their video on their website about whole life talks about getting the policies on kids who don't have dependents, who don't at that point have a need for death benefit, but the cash value is going to grow so they can use it to buy a house. I mean,
in direct contradiction to exactly what they're citing here.
Yeah.
Right. Infinite banking is used with younger customers who have less disposable income, investment sophistication, again, talking about you, and often have no dependents and no insurance need. But yet on the page of their website, they're promoting the fact that you should be buying whole life insurance on your grandkids, right? To prepare for life, for just life in general.
Maybe maybe this is a time to show this was their website again on, well, I don't think we're going to draw. So I'll take it to the actual website. So it's more accurate. Benefits of whole life insurance. Number 1, to death benefit. Number 2, build cash value. And what it says in there, with whole life, the policy builds cash value over time that can be used to pay for college, supplemental retirement income. Wait, retirement income?
Wait, what? That's one of that's one of the things they did not support.
Or for emergencies. Now let's look at the one that they have for our UL product, variable universal life.
Disclaimer, we're not fans of ULs.
Okay. This one says you can borrow from the account. You can borrow from the account value for any purpose you choose.
Which is, again, is in direct contradiction to their previous point about them having a problem with someone having early or immediate access to their policy cash value. This is, I'm getting fired up, Anthony.
Yeah.
All right. I don't know if we need to beat that point up anymore.
No.
Right. Let's move on.
Yeah.
Fifth point. It says they're not fans of this strategy. Fifth time, because resulting in policies having a higher lapse risk if customers do not fully understand the impacts of policy loans, interest accrual, and the likelihood that repayment will be required, especially in rising interest rate environments.
Ooh, I like how they're kind of throwing the interest rate environment as a cause for these lapse.
Well, lack of education is what they're citing, is kind of what I'm taking away.
Mm-hmm.
Right. And they're saying that would result in a higher lapse risk.
Mm-hmm.
Anthony, what I have an opinion on this, right? What's your 2 cents on, do you think we have a higher lapse rate in our business as compared to like a traditional planning model? What's your thought there?
It depends. Are you comparing Infinite Wealth or IBC?
Both.
What I would say is there's some bad apples in there, and I think those bad apples are going to have a higher lapse.
So part of I appreciate you sharing that. And what I would say is that part of the video is we're trying to delineate us from other people, right?
Yeah. Yeah.
And they're going after the bad apples. I get it, but I think that they're casting a very broad net here, and it's very unfortunate. So Anthony, in regards to kind of Infinite Wealth in our business, what would you say as far as our lapse rate, how it compares to others?
Now, the lapse rate is ratio use, or how many policies that you have on the books and how many, stay on the books, right? And our lapse ratio is extremely small. Like typically, I think the standard is it's great if you have 90% staying on the books. I don't know what that amount is, because we don't really need to, because our lapse are very minimal. And so I think for us, our lapse rate is going to be better, or if you're looking negative or bad, but because but I would say the amount policy that we have lapse compared to other IBC people or traditional planning, which if that's what you're asking, I would say is much lower than anybody else.
One person last year, 2022, is the number of lapses that I had. It was one client. They had 2 policies. We've got a pretty large business, right? Mm-hmm. So I take offense to that, suggesting that because someone is practicing infinite banking, that they could have a higher lapse risk. I completely disagree, right? If somebody's managing this and somebody understands kind of how this thing works, man, the likelihood of a lapse risk goes way, way down. So,
well, and I think the reason why our lapse risk is so small is for 2 things. Our client, we're designing these policies as assets. So our clients are viewing these premiums not as a payment, but as a deposit.
Mm-hmm.
Also, we have a lot of education that we talk to people about this. And one thing we continually recommend our clients do is never borrow out the entire cash value of the policy. We always recommend ideally leaving like whatever the required premium is, where we call the base or the have to premium, always keeping that in cash value at all times, because life is going to happen. And then if we have that cash value, we can use that to pay the premiums. So I think that's in part why our lapse ratio is so small.
I agree. Go ahead and pull that one up. So those are the 5 big main points that they're sharing there. And hopefully we've kind of shared a little bit of our kind of rebuttal of our background. Go and scroll down. The background right in this section, what they're talking about is they're talking about Stoli, which no one's really a big fan of. It was back in the mid 2000s, stranger-owned life insurance. Doesn't really pertain to today. Anthony, we got another lapse risk is kind of what, oh wait, I'm sorry, I missed a page here. All right, so let's go down here. Personal banking concepts overly emphasize access to cash value. Cash value accumulation, guaranteed income tax advantages. One important feature of whole life is that the policy owner can access the policy's cash value through policy loans to help meet future major expenses or emergencies. They have an issue with that, but yet they promote it on their website. We've already gone through that, right?
Yeah.
Personal banking and similar concepts are inconsistent with MassMutual company policy. However, because they focus primarily on accessing the cash value above all else, often minimizing or disregarding whether the client needs or can afford the insurance. Instead, cases are designed to generate a significant amount of cash value in the policy, particularly in the early years, with the client often accessing the policy's cash value almost immediately after issue, such as to meet the client's daily expenses or even for other investment purposes, essentially likening the policy to the client's own own personal bank. There's a lot in there that I disagree with, but there is some pieces in there that I do agree with. I think we've touched on it, but just briefly. Anthony, do you want to touch on it?
Go for it.
Yeah. So it says where it says that what I disagree with is the fact where it talks about creating cash value, generate significant amounts of cash value in the policy, particularly in the early years. Again, right, is if you guys don't want us to do that, you guys have embraced the policy design features that allow us to design those. And you guys even have products that are geared exactly towards that, which is the high early, the HECV product. So, man, right? You guys have accommodated that, and then to say that you are not a fan of it or that it is not that's inconsistent with your company policy, again, extremely hypocritical. The policy's cash value almost immediately after issue, such as to meet the client's daily expenses. That I agree 100% with.
Yeah.
Right? Meeting somebody's daily expenses, terrible idea. We are not fans of that. Again, that's more of the checking account approach, and you should not be doing that. If somebody suggests that, run for the hills. Do not listen to what they have to say after that. But everything else, as far as policy, cash value immediately, hey, if you've got an investment opportunity, you don't know when that's going to come, right? We are creating cash value because we are waiting for that next investment opportunity, and whether it happens on day 35 or month 35, it doesn't matter to us. That's why we position and create the policies the way that we create them. Awesome. What else? Personal banking sales strategies are high risk, right? Our experience has shown that strategies that promote whole life insurance using personal banking often violate state insurance laws, can lead to allegations of inappropriate sales practices, and often result in customer complaints and unwinding of the policies. Man, this is not us, right? Is very, very low lapse rate, right? We feel like we educate clients on how the policies and how this strategy works, right? There's a concept and there is a product to kind of go along with this scenario. So, man, if you guys feel you're uneducated, call us, right? Whether we help you implemented the policy or someone else did, we'll get you educated on kind of how this thing works. We hit on a lot of stuff. Some of that stuff got a little redundant without getting into the weeds, but this is a surprise, man, right? MassMutual, major insurance company, coming out and saying, hey, listen, we're not fans of this. Anthony, what's a summary that you've got here as we're wrapping this thing up?
Well, first thing I want to say, and we should address it earlier, if you have a MassMutual insurance policy, you do not need to worry, right? Your policy is a contract between you and the insurance company. They cannot change that contract without your knowledge. So there's already a loan provision in there. So you are going to be fine, right? What they're saying is anything going forward, if any agents, or one thing we didn't read on there, but I'm the one who told you to stop. But if an IBC agent sells or presents a policy with Mass for IBC, that we can have our contract terminated. So, but I just want to say, if you have a policy, you're totally fine and safe, right? But when this came out, I'm surprised it came out so boldly.
Mm-hmm.
I mean, we had heard some rumors and we had talked to some people that Mass had some concern
with specific messaging coming from advisors was the case. It wasn't IBC.
Those agents, I remember getting a text from one of them like, "Hey, can you call me? I just need 2 minutes." And he's like, "Hey, Mass Mutual says I can't write with them anymore." And so here's what's interesting. So I call Mass Mutual like, "Hey, what's going on?" They're like, it's not you, it's them, you know. So you can still do the business, which what I think is interesting, to be honest, we called our Mass Mutual contact, and he's like, "You guys are fine. It's the other guys who they're worried about, who it pertains to." But again, it says in the contract that they can terminate me.
Yeah.
Which means I would lose all my renewals. But you know, there's also a large IBC guy out there that even wrote a comment on his YouTube when he was asked about it. And he was told, just keep doing what you're doing. So what I'm hearing is very hypocritical.
Mm-hmm.
And it's just a few bad apples. And they're kind of throwing out the whole bunch on simply a few. And you know what? If you don't want people taking loans out and building high cash value early, just don't let them. You can change the illustration. Don't allow these writers to do that. Don't have a product that's literally has high early cash value in the name.
Yeah.
I mean, don't sell that product. Make some limits. Stop people who are doing it wrong. Those guys shouldn't be teaching IBC. But what do you have in summary? Final thoughts?
Final thoughts is, I'm looking at this and I this is upsetting, right? So if somebody were to ask me today, "Hey, are you going to continue to write or place business with Mass Mutual?" Right now, I'm going to say, heck no. Right. But again, that's a very emotional reaction, right? We need to take a step back, and truth be told is that Mass Mutual has never been a big focus of our business, right? We've used it in very limited circumstances. And you know what? If it is best for the client and it fits in the right situation and it is in the best interest of the client, we'll look at Mass Mutual. Yeah, we'll look at Mass Mutual. We'll put it in place if it ends up being the right fit. But I don't know, right? It's very, very difficult to, do business with someone that has this type of public stance on infinite banking.
Yeah.
Very
and
tough.
I feel the same way, Cameron, just a little bit more heartfelt. Cameron, you are right that we haven't been using Mass Mutual much. And again, it has nothing to do about directly with the company. I mean, we think all the top mutual companies, they're great sound companies,
mm-hmm.
right? But some are good or better regards to infinite banking. And to me, one of the most important things is the flexibility with the premiums, meaning that typically with those premiums, part of it is, the have to, and part of it is the want to, or the PUA. Oftentimes people get in a bind.
Mm-hmm.
You know what? I have a client now, he's in the mortgage industry. And so his income just dried up. So we had to lower the premiums and to drop the paid up additions or the want to. One of the problems with Mass Mutual, they're not that flexible with the PUA. And you really have two options. One is it has to be paid when you pay the base premium. And if you don't, So let's say, for example, the premium comes due when you don't pay the PUA, you can't. You can't put that PUA back on till I think it's year 5. So it's very penalizing you if you're unable to make a PUA payment. And what happened with this client, we were paying annually and we wanted to switch to quarterly. And so, or we just wanted to just pay the minimum or the have to premium. And it was, the policy almost lapsed because of the inflexibility. Now, the other PUA that they have can only be paid 3 times a year, which means you can't, if you're paying monthly, you can't include it on the monthly amount. So that alone right there was really the reason why we hadn't used MassMutual. But, you know, when we meet with a client, I think one thing that makes us different is we put people through an education process. And I don't know how many people come to me and say, hey, oh, I know about IBC. I read the book, or I know this. I just want to jump to the illustration, or let's just start underwriting. And what we found is we have an education process. Mm-hmm. And what we found is if we skip a step, we end up tripping. Right? That just came to me, but
that was good.
Maybe we can tighten that up.
Yeah.
But so we make people go through an education process, right? And I think that that is very important.
Last thing that I'm going to share is that rumor has it is that their lead attorney, MassMutual's lead attorney, said from the main stage at a very large corporate meeting that he is a fan of infinite banking, and that if he has whole life policies, and if he had an opportunity to present itself, that he would no doubt borrow against his policy. So there you go. I'm curious kind of where this stance is coming from, if their lead attorney is in fact a fan and would publicly state that from stage. So very curious. Let's wrap this up, Anthony.
You know, one thing, what I'm going to say in summary is that it seems a lot of these mutual companies go through an IBC crisis. There was one when we first got into the business, and they didn't put a memo like this. What they said is, if you take a first-year loan, we're going to charge you back your commission, right? So, and then there was another company that kind of put the kibosh on IBC. Both of those companies eventually turned around and are now promoting infinite banking. So I anticipate that this is what's happening with MassMutual. Mm-hmm. And I wouldn't be surprised if maybe there was a lawsuit, and they're just trying to protect themselves, but now having this memo, hey, we don't promote infinite banking. But the bottom line is, we're not going to do business with people who don't want to do business with us.
Mm-hmm. I feel very attacked.
You do.
I know. All right, let's wrap this up, Anthony. Well said, guys. Interesting kind of take that's happened here. So we thought we'd kind of share this with you. And man, hope this was a value to you. And if you guys have any questions, feel free to reach out. If you guys have questions on your policy, interpretation, education, right, click that link in the show notes and schedule a meeting with Anthony or I.
Go make it a fantastic day.
Take care.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.